It's a honor for these kind invitations for myself as well as for my students, those who are also here today. It's something that wonderful to see the students from Indonesia as well as students from Malaysia together into this one platform where we can have some sharing session with regards to the topic that we are going to be discussed. So I believe that this is the international training for young Islamic economics leaders. Yeah. So surely, yeah, one day all of you are to be the leader in the field of economics, in finance. So I hope that today's sharing is going to give an additional information to everyone. We have a speaker from Indonesia, we have a speaker from Malaysia, and from this sharing, basically, we can have more fruitful in terms of the how the in terms of the management of risk, especially in the context of bank in Indonesia and in Malaysia. So as been planned earlier, I will be giving a 30 minutes of sharing, and after that followed by my brother Professor Dimas. All right. So with the permission, Prof Dimas, can I start? So let me start the share of my what do you call it? All right. So this is the so-called that the topics that I'm going to share. Before that, can everyone look at the screen? Is it this is the risk management topic. Basically, this topic has been discussed last week in my class, but I would say is that this topic is quite interesting to be again discussed to everyone in the context of the Islamic banking and finance. And after this, we are eagerly wait to see the sharing by Professor Dimas, how the risk management in the context of banking, especially when we talk in the context of Indonesia. So I will be basically focusing in the concept and fundamental, what are the risks in the context of the Islamic finance. So as we know that this is not something alien to everyone, all right? When everyone listen to the context or what we discuss about the risk, it is quite very important topics in every aspect of management, all right? So management is about how do we basically handle or manage a thing with reducing the risk, all right? Every management exercise, every management topic is about how they can mitigate or reduce the risk in order for them to reach to the desired goal or the objective, all right? So that's the reason why every institution, regardless to financial institution and non-financial institution, they are very concerned about the risk, all right? And as we know that financial institution, one of the institution that highly would be exposed to the risk, all right? The first risk I always say is that the medical institution, yeah? Medical institution means that when a patient go to the hospital, and the doctor basically is going to be giving a medicine or giving the treatment in order to reduce the risk of that or reduce the risk of the severity of that respective injury. So in another industry is also important, it will be the financial institution, because financial institution, they have two outcomes. Number one, there will be a profit or there will be a loss. All right. So that is the reason why the risk is very important in the context of this financial institution, because at the end of the day, these financial institution, they need to provide return to their investor. All right. So investors are basically putting their trust to the financial institution, which they don't have the capability in terms of gaining fund, but they have the capability of capital in terms of investing. So the financial institution are basically given this responsibility to invest and also share the investment with their respective investors. All right. So this is the learning outcome. At the end of the day, what are the things that we are going to discuss? All right, these are the 4 learning outcomes. For example, number 1, whether we understand the concept of risk management, then from the Islamic perspective, with the particular reference to the Islamic commercial transaction, then we also have the familiar with the type and the characteristic of the risk exposure to the Islamic banking risk, under the IFSB guiding principle. And how do we basically examine the risk management technique in Islamic bank, and such risk can be avoided, absorbed, or being transferred. And last but not least is about to understand the risk management techniques such as hedging and other instrument basically can be used in terms of mitigating the risk. All right. So since that is only about 30 minutes, I try to my best to explain rather than covering all the slides. All right. So earlier when we talk about the concept of risk, all right, in today's world we can see is that the geopolitical become a very important role. All right. Even in the recent, all right, in the recent announcement by the President of America, I would say is that Indonesia, Malaysia, China, all these countries is being affected with the so-called that the concept of the tariff, yeah, the changes of the tariff. So when there is a changes of the tariff which is being imposed by the US government, then we can see that most of these organizations, most of the companies, and also the countries are playing their, what they call it, taking the risk measurement. All right. So the risk measurement will be if the risk of the measurement are getting increased, therefore they need to find way and strategy how basically they can mitigate for that respective changes, especially on the tariff. So beside that, I would say is that the central bank of respective country in Indonesia or in Malaysia, they are also very particular in terms of the changes of the interest rate. All right. So later we are going to see one of the what they call it, risk that will be difficult to be eliminated will be the changes of the rate of return. All right. So maybe I will give some, what they call it, clue to everyone. There are two type of risks. All right. Can anyone suggest, can anyone just unmute your mic, can tell me about what are the two type of risks, the common risk? Anyone from Malaysia or from Indonesia?
Risk sharing.
Risk sharing, yeah. Wow, this is a risk sharing under the what? What are the contracts for the risk sharing? Anyone? It's okay. No wrong, no right. It's just your guess about the risk, and it is quite very open to explain from various perspective. All right. Maybe I give you a clue. Start with the S. And
External shock, is it?
all right. All right, that's good. External. External is also known as what? External. External risk.
Systematic risk.
Yes, good. Who's that?
Misa Dafa.
Dafa. Is it Dafa?
Yes, Doctor. Yes.
Brother Prof. Dimas, this is Brother Dafa. He's from Aceh. Currently, he's doing his Bachelor of Finance in USM. So, Brother Dafa, you are Malaysian today, yeah?
Yes. I'm with the Malaysian student.
So you have your Indonesian friends is also in the group. Pak Dimas, they are also here. All right. So yeah, thank you very much, Brother Dafa. We have a systematic risk and unsystematic risk. All right. So these two risks is basically play an important role in terms of the how the organization or the country or even the financial institution will react into that respective systematic risk and unsystematic risk. Maybe someone can give an example of systematic risk. What is systematic risk? For example, what would be the systematic risk? Guys, anyone? Our brother and sister from Indonesia? A guess about the systematic risk? Okay. So systematic risk, unsystematic risk is okay. Maybe some, I would say that's some line issue to get the clear voice. Systematic risk is something that we cannot eliminate, all right? Means that it is something out of the control, but we cannot eliminate them, but we can adjust, all right? So usually the systematic risk, as mentioned by one of our brother, I think Brother Dafa mentions about external, yeah, or our brother from Indonesia may mention about the terms external. It is something that coming from the outside force which influence the changes in the economic, all right? For example, that the changes of the tax tariff mentioned earlier by myself, where the Donald Trump makes some additional changes on the tariff. So this one is known as the systematic risk, all right? Which the organization, all the organization, even the country will be affected by the systematic risk. However, in terms of the unsystematic risk will be the otherwise. For example, any risk that due to the internal of the organization. For example, there is some issue in terms of high turnover. So all these internal risks can be overcome is known as unsystematic risk. All right. So risk management, if you look at the slide, is about identification, quantification, and understanding business risk with a view to undertaking necessary measures to control or mitigate the risk of its impact. So from the Islamic perspective, of course, I think the term is linked by Al-Ghum bi Al-Ghum. Maxim says that the entitlement to the return with liability of risk, all right? So in Islam is basically we associate and we accept the return and risk, all right? The return must also attach with the risk. Unless, for example, some of the instruments, for example, deposit, wadi'ah. Wadi'ah, there is no return, yeah? But mostly like, for example, in Malaysia today, we no longer using the the contract of wadi'ah in the bank. So any contract that related to the investment, any contract that related to the debt, any what they call it, contract that related to the partnership, it is basically come in a package with the return as well as the risk. All right. So in today's world, we can see is that there are a lot of so-called that issue, yeah. Even in Malaysia, I would say is that today, in today's world, we have the issue of scammers. All right, scammers means that there are a lot of fraud in these cases also in Malaysia, which today we can see is that where the what they call it, the unethical institution or organization, which they are so-called the illegal institution, they are targeting some of the people with big, huge return on the investment without loss. All right. So from the Islamic perspective, when we are basically get this kind of information that someone or anyone or any institution come and promise to your parents, to your friends, or even to you, says that you can invest to this respective instrument and you will be given, 200%, 100% of return without any loss. So from the Islamic perspective, you must be very careful that any investment that without loss is not from the Islamic perspective. Means that those people that basically are promising this kind of instrument, it may not be true, all right? So that's the reason why we have a lot of issue, we have a lot of cases in our country, or maybe in your country, maybe later will be shared by your professor, about the issue of scammers, all right? So we must be very careful, because at the end of the day, any transaction that we are going to establish, we need to look from the Islamic perspective. Does Islamic allow us to enter to any what they call it, contract which promise return without loss? All right. So if you ask myself as a Muslim, surely I will not be entered to this kind of contract, because we know at the end of the day, these are the issue that is been going on today, where most of these people has been cheated by these illegal institution or individual, unethical individual, in terms of what they call it, giving or promising high return and also no loss. All right. So we must be very careful on that kind of situations. So business activities, of course, all the business activity are exposed to the risk. All right. So I would say is that the financial institution, basically their loss is like every second. All right. Every investment that they involved, which will be based on the decision that they make, must be a decision which is being basically anticipated with various factors. All right. What are the factors that need to be anticipated? We are going to see what are the things that we are going to focus later in our in terms of the risk. All right. So musyarakah, mudarabah, we know that these are the partnership. All right. In terms of the partnership, and when we enter to any partnership, we must anticipate a loss. Either you are in mudarabah risk or you are in the musyarakah. All right. So the investor must acknowledge that in any partnership investment, the tendency to get return is also there. The tendency to get loss is also there. So that is the reason why people always says that when it is Islamic, there is no loss. All right. No. Even from the Islamic perspective, there will be a loss if there are some, issue in terms of the investment. For example, we are in the agriculture, sometimes people get into a partnership in an agricultural land. However, due to the mother nature, for example, that heavy flood, all right, in this situation, basically that we are exposed to that loss, all right? So which is the loss due to the, the flood issues, all right? But sometimes in partnership, if the negligence is there, then the loss need to be bear by the partner because due to the negligence. Okay, avoiding risk with zero profit, as I mentioned earlier just now, is allowable, which basically I'm not sure in the context of Indonesia, but in the context of Malaysia today, since in 2018, IFSB it's been stated that all the saving account in Malaysia is no longer using Wadiah. Okay, all the saving account in Malaysia in today is basically based on the court. All right. So we are putting our money into the bank in form of loan to the bank. So now the bank is basically eligible to use our money for the purpose of financing. All right. So if our money is being deposited in the bank in form of wadi'ah, so basically the bank does not have the right to use our money for the purpose of financing. So that is the reason why I think there is a series of improvement, I would say, is that in the banking industry, where they wanted to make sure that the contract that we use in the bank should be according to the purpose, as well as what are the instrument that further can be used by the banking industry. All right. Earlier just now, there are two types of risk: systematic risk and unsystematic risk. All right. So beside in the context of the financial and non-financial, we can put this risk in the context of financial institution. So financial institutions are basically exposed to these two types. Number one, related to the finance. Number two is basically related to the non-financial risk. All right. So when we say about financial risk, I would say is that all of you have understanding about how do you basically calculate the market risk, credit risk. For example, credit risk, how do we know the credit risk? Anyone? What would be the tools that can be used to measure the credit risk? Credit risk, liquidity risk, all right? So if you still can remember that, I would say is that you have learned the topic of ratio analysis, all right? Ratio analysis is basically providing an indicator about the historical data. How is the condition of that respective financial institution, all right? So after that, we also have operational risk, regulatory risk, legal risk, and Sharia risk. So when we talk about the Islamic bank, so Islamic bank is basically they are exposed to additional risk compared to the conventional. All right, conventional financial institution, they are not entitled, or they are not having any issue in terms of the so-called that Sharia compliant risk. All right, because conventional bank they basically does not comply with Sharia. But when we talk about the Islamic financial institution, so Islamic financial institution, they have one unique additional risk compared to the conventional. So the unique risk will be the Sharia risk. All right. So this is very important for the banking institution to ensure that they have the trust among the so-called that investor, especially the Muslim investor. So the Muslim investor is basically, they want to make sure that the money that they invest should be invested to the Sharia compliant organization. If the organization violated this Sharia compliant condition or the requirement, then the bank or the financial institution is going to lose huge amount of money, because the Muslim investor will withdraw from their respective financial institution. So that is very important when you, after this, work in the financial institution, especially the Islamic financial institution, you are going to see how your institution are taking care of their reputation as a financial institution that comply with Sharia compliance. All right. So this is the so-called that the in the table, yeah, who says that in the table, the type of risk, and usually these are the question will be asked in the maybe in the final exam. So what are the financial risks that exposed by the Islamic banking? So usually the student will need to list down the credit risk, market risk, liquidity risk, operational, displaced commercial risk, Sharia risk, and the rate of return risk. So it is very important to everyone to understand, because when we are in the financial institution, we are not only focused on the return, but the backbone of the return is basically is about how the organization able to manage their risk. All right. Now we are going to look in terms of the how does the unique risk of the Islamic banking businesses. For examples, that number one, we are talking about the credit risk. Earlier, I was asking what are the credit risks. So credit risk is basically is about the risk encountered in the business transaction when there is a potential for default. All right. When you hear the term potential for default, means that the banking institution, they are very highly regulated in the sense that they are very concerned about the default. Okay, so that is the reason why most of the bank usually they will not simply approve the loan. All right, they will look in terms of the each participant application in detail with their condition to be met before they approve the loan. Why? Because they wanted to avoid the non-performing loan. They're known as a NPL. All right. So every financial institution which they are giving financing, basically they are exposed to this credit risk. All right. So each NPL, usually the threshold is being used to measure the healthy of this respective financial institution. It would be less than 4%. All right. If the organization has more than 4%, means that they are having trouble. All right. So every financial institution, they try their best to make sure that all their borrower basically pay their financing installment according to the time, or else this kind of bank will be having problem. And also the individual or the borrower who could not pay according to time will be having a bad reputation in the future to get another financing or the loan. All right. So that is number one in terms of the financing, credit risk. Number two, in terms of the equity investment risk. So equity investment risk is about how an individual, basically they buy shares. Okay. I would say is that some of you, maybe Dr. Dimas, have a lot of shares invested in the share. So we are very concerned about the market price. So if the market price goes up, then we are happy. If the market price or earning per share goes down, then it's an indicator of loss. So equity investment is basically one of the risks that usually is depend on the investment. All right. So it can be from the unlisted company, or it can be from the joint venture, or it can be from the listed company. So each of these three type of the companies basically are exposed to the risk. Either you can what do you call it, accept return, or you may also expose to the loss. All right. So the third part of the risk, now market risk. All right. Market risk is something that is depend, yeah. It is quite very so-called that is a severe disease. It's like a cancer. All right. So market risk usually will be what do you call it? It will be something that is going to affect the country. For examples that what happened during the 1999, during the financial crisis, most of the country in the Asian region was affected by the what do you call it, the risk. All right. So what do you call it, all these countries basically they are depending to get the support from the what do you call it, institution such as International Monetary Fund. So International Monetary Fund is basically an institution that provide financial assistance to the what do you call it, to the country who are basically looking for additional liquidity. So the additional liquidity basically will be imposed the risk or the what do you call it, the rate, which basically will be the return to be paid back for the IMF. All right. So, however, that is in the organizational level, but even the at a country level, yeah. For example, we have overnight policy rate. In Malaysia, recently we find that some of the what do you call it, overnight policy rate has been changed. I think last year. So far this year, no what do you call it, no changes in Malaysia. And I know that some of your parents, you can ask your parents if happened in Indonesia. In Malaysia, I think it's increased by total of 2%. Okay, a total of 2%, which also basically change our monthly installment because of the changes of the market risk. So the volatility here, it also will affect in terms of the what do you call it, the principle. All right. So under the market risk, there's another one more things that I think is quite very relevant between Indonesia and Malaysia today. If you wanted to come to Malaysia, if we are going to Indonesia, we will check the foreign exchange rate. All right. So foreign exchange rate become one of the what do you call it, indicator to see whether our currency are good or bad. All right. So it is basically exposed with the market risk. All right. If the dollar getting stronger, then the ringgit basically is going down. Similarly, Indonesian currency will also getting stronger if the dollar is getting weaker. So this is something beyond what they call it, the government or even the institutional control. It is a very dynamic and complex what they call it, factor that basically affect to the changes of the currency. All right, so now we look in terms of another risk, which is known as the liquidity risk. So liquidity risk is something that is about insufficiency liquidity. All right, what happened in the liquidity risk? So liquidity risk, I always tell to my students that you can refer to yourself. All right, refer to yourself in the sense that if your income is lesser than your expenses, means your expenses is more than your income, means that you are having a severe liquidity problem. All right. So the organization such as the financial institution, they must ensure that their cash flow must be in a positive in order for them to be liquid. All right. Or else they are going to be in the bad situation. For example, what are the situations that can be lead to the risk, liquidity risk? So number one here is incorrect judgment on compliancy, unanticipated change in the cost capital, So this is from the organizational perspective, yeah. So liquidity risk, if you can still remember in your ratio analysis, all right, how do we measure the ratio analysis, liquidity ratio analysis? You can just take the current asset divided by the current liability, all right? If your current asset is more than the current liability, therefore your liquidity are in a good position. If your current liability is more than your current asset, then auzubillah minasyaitonirrajim, means that your organization are not in a good situation. All right. So it can be measured through using this kind of method to see in terms of the health of the organization. So similarly, the bank, they are very concerned in terms of their liquid. All right. So that is the reason why the bank, they will sure they are not being known as a bank run. Okay, we know about bankrupt. Yeah, bankrupt means that one person, individual, is being having problem in terms of their payment. It become a bankrupt. Okay, there is another terminology that we use known as a bank run. Bank run means that the bank is without liquidity. The bank is having issue in terms of liquid. Means that the people are going to the bank, they withdraw their money with extraordinary issue. Okay. Because sometimes, there are some country, having some political problem, like recently in Sri Lanka, all the people go and collapse their government. They go and throw their prime minister, and they go and break all the so-called that the banks. So in this situation, people will go and withdraw their money as soon as possible. All right. So in this situation, if the ATM machine does not have sufficient cash, then they are going to have a problem. So usually the bank run will happen in a abnormal situation, abnormal economic condition, and also abnormal government or geopolitical problem. All right. So we are blessed with Malaysia and Indonesia having a more stable, and the people are still having a good economic activities. So like Sri Lanka having that issue, I think about 1 or 2 years ago, when there are some issue in terms of their stability in politics. All right. So a rate of return risk, usually the rate of return risk is things that usually will be under the category of systematic risk, and rate of return usually will be impacted from the market risk. Usually they are very fragile. The changes in the market will also impact to the rate of return. So rate of return, for example, now when you invest in the organization, or the investor is being given a promise by the organization, if the changes of the return, and that is the risk. For examples, in Malaysia, we have the yesterday I was listening to the EPF, Employee Provident Fund. Okay, Employee Provident Fund rate of return of this year is lesser than the last year. All right. So the last year rate of return was almost 5.5%, and this year they lost about 0.5, is about 5%. All right. So this is happened due to the issue of the the market instability in the financial institution. Dimas, I have another 2 more slides. Yeah, I will stop because I've been giving half an hour. All right, operational risk. All right, so operational risk is basically about how the organization, because as we know that Islamic financial institution, they are religious-based institution. All right. So every investor, for example, the Middle East, the oil country, they are looking for the Sharia compliant organization for them to invest. All right. Therefore, the status of Sharia compliant is very important. If the Sharia compliant status is being revoked, then they will be having loss of trust from the Islamic investors. So these are the Sharia non-compliance. For example, they are issued in terms of the procedure, they are issued in terms of their contract. So if you still can know that each of these financial institutions, there will be a Sharia governance. So the Sharia governance, basically, they are going to conduct the Sharia compliance review or the Sharia audit. If the Sharia audit or the Sharia compliance review found to be not compliance, therefore they are going to lose in terms of their Sharia compliance status. So from the beginning, we talk about the concept of risk, a very general and fundamental perspective. And then we basically provide the narrow perspective, how the risk in the context of the financial institution and how the risk in the context of the Islamic financial institution. So basically, all the risk is being shared by every organization, and except the unique risk which is being only faced by the Islamic or the Sharia compliance company will be the Sharia risk. The rest of the risk basically is a general risk shared by every institution in the world, regardless whether they are Sharia or non-Sharia. But once they are being given a status of Sharia, therefore they are exposed to the Sharia risk. All right. So I think so far that is my sharing about the concept of risk today. So I'm eager to hear from my colleagues, my friend, Professor Dimas, after this. So I hope that maybe after Prof. Dimas sharing, then we can have some Q&A after that. Then we will basically have some, what do you call it, more sharing from the two perspectives. All right. So with that, now I pass back the session to the moderator of the session. Thank you very much for the opportunity. I hope that the students from Malaysia as well as from Indonesia have some fruitful knowledge in this morning. I hope that this is not something new to you and all of you are aware about this knowledge. So thank you very much. So now I give back to the handsome moderator of the day. So brother, now the floor is yours. Thank you very much, brother.
Thank you, Dr. Anwar Allah Pichai, for your insight. It's very insightful. Thank you so much. So we continue to the next sections. The second speaker will be delivered by Dr. Dimas Baguswiran Kusuma. To Dr. Dimas Baguswiran Kusuma, time is yours.
Okay, Rizky, I will share my slide to you, Rizky. Would you please help me to share the screen? Is it okay, Rizky?
All right, sir.
Okay,
Is it okay?
I
Okay.
will share to you my slide.
Oh, all right.
Yeah, Rizky, have you received my slide?
Yeah, I already received your slide. Maybe
Okay, so I have two slides, Brother Rizky. So my first slide here. So could you please share my first slide first? The PDF version first. So I have
okay,
two
the PDF
slides.
versions.
The last one that I submitted, Rizky.
Okay, so wait. Okay, wait.
Okay, I start first. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Alhamdulillahirrahmanirrahim. Assalatu wassalamu ala rasulillah wa la hawla wa la quwata illa billah. Rabbi shrah li sadri wa yassir li amri wa hlul 'uqdatam min lisani yafqahu qawli. Respected my dear friends, my colleagues, Professor Dr. K. Haji Anwar Pichai. Yeah. So actually, Dr. Anwar here is my fellow friends since we were in the PhD program last few years ago. Yeah, almost forgotten Dr. Anwar. So I visited his university a few times, yeah, in University Sains Malaysia, USM. I do see that his campus is very great campus, yeah, very great and very great in terms of the ranking, yeah, research publication, yeah. So therefore, we are blessed to have you, Dr. Anwar, in this very good occasion. And by the way, Dr. Anwar, for your information here, the participant of this summer school program, not only coming from our university, UMY, but also attended by our international students at UMY, and also the inbound students. So we have inbound student from University Terengganu, Malaysia, and also we have inbound also from University Utara, Malaysia, Dr. Anwar, and University Sains Islam Malaysia as well. So just remembering a few years ago, we sent student to you, yeah, and hopefully the next time we can send again the student to your university, and also your student can come to our university.
Inshallah. Come, please.
Okay, so Dr. Anwar, let me just share with you all, dear students. Oh yeah, forgotten, Dr. Anwar. Hello, this program also attended by senior high school student, doctor.
Wow. Thank you very much.
We would like to motivate and encourage them also to earlier understand about risk management for banks. Yeah. So hopefully, by your presentation just now, they are motivated and inspired to learn Islamic finance or economics more details. Okay, Dr. Badrizki, I have two slides, by the way, fellow participants. Yeah, so just very short slide, yeah, on risk management. Dr. Anwar actually has explained to you very details, but I just want to reconfirm what he has discussed just now. So dealing with the risk management basically is we are trying to look for the balance actually. So if you look at the organization, yeah, the base organization actually somehow dealing with the too little risk, yeah, often means that the organization is being too conservative, yeah, or in other words, they are limiting their potential for growth, yeah. However, if your organization or yourself highly has too much risk, yeah, and then the company is likely to crash and burn at some point along the way, yeah. So this seems to be the risk management is how we manage the risk so that the risk is not too little and not too much, yeah. It should be in between. So therefore, Dr. Anwar just mentioned about the risk could be negative, the risk could be negative, yeah, it could be positive. But our challenge is how to make the risk become in the threshold, yeah. So talking about the risk management here, we have 4 steps, yeah. Risk identification, risk analysis and evaluation, treating the risk, and monitoring the risk. Next one, Rizky. So this one is treating the opportunity, treating the risk, yeah. So all the project activities always carry some risk, yeah, because we are facing uncertainties, yeah. And these uncertainties actually include, yeah, both negative impacts on our threat, yeah, and also opportunities, positive impacts, yeah. And the threat here has potentially negative impact that the project management team should strive to mitigate actually, yeah. And organization and stakeholders are willing to accept varying degrees of risk. This call is the risk tolerance, yeah. And the next one, if you have understood or identified the risk, so your risk must be documented, yeah, in the form of the risk register, yeah. This risk register consists of the list of the identified risks, the root causes, categories, and responses. So you have to build up your own table of the risk register so that this table can give you information about what is the structure of risk that you are facing right now, basically. Next one, Badrizki. And the next slide will be the next one, Rizky. The next slide, Badrizki. Yeah. So the next slide here is when you have identified your risk, yeah, and you have already understood your risk, and you need to analyze and evaluate your risk, yeah, because your risk, yeah, that mentioned by Dr. Anwar just now could create systematic risk. So the systematic risk could happen because you cannot absorb that risk. You cannot manage that risk. Yeah. So therefore, in this case, in very simple calculation, actually is risk identification dealing with the likelihood of the likelihood of the possible impacts. Yeah. In that sense, we have to estimate the probability of the event occurring. Yeah. And then the second one is multiplying with the amount of the cost that you will bear. In this case, is the risk of events. Yeah. So the multiplication of the probability of the event and risk of event here will value your risk. Yeah. So therefore, in the risk matrix, yeah, is based on the two main primary dimension. The first is probability of the risk happening or likelihood. So this risk is an event that may occur, not it must occur, but may occur. So therefore, the probability of the risk occurring here is between the 0 and 100. Yeah, not 0 or not 100, but in between, because we are not God. Yeah. So note, it cannot be exactly 100, because if 100, that would be a certain, not a risk. And also it cannot be exactly 0%, or it would be a risk. So it means the risk here actually is between the 0 and also the 100. And second one is the impact. Yeah. So every risk that you face, yeah, it will be create an impact. And it always has a negative impact somehow. Therefore, somebody try to avoid. However, the size of the impact varies in terms of cost and impact on health, human life, and or some other critical factors. So it does mean that you cannot avoid or just run away from the risk, but you may take such portion of the risk with a certain threshold, yeah, certain degrees like that. Next one, please. Next slide. Yeah, sebelumnya Rizky. Yeah. So in terms of the risk dimension, yeah. So I try to divide into 4 characteristics. Yeah, and maybe you can also imagine with your own risk, yeah, condition. The first is the low impact and low probability. Yeah. So if you imagine this kind of low impact and low probability, it is located in the risk in the bottom left corner, yeah, or low level. Yeah, it means that you just ignore them because low impact and low probability. Yeah, just ignore. And the second one is low impact and high probability. Yeah, low impact and high probability. So the risk is the top left corner, more moderate importance. So if this happens, you can cope with them and move on. However, you should try to reduce the likelihood that they will occur. So you may ignore, but you have to concern with the probability of occurrence. Yeah. And the next one is high impact and low probability. Yeah. So this risk is the bottom right corner are the high importance. So if they do occur, but they are very unlikely to happen, the probability is very low. But once happen, the impact will be worse. For example, in the case of COVID-19, for example, in the COVID of tsunami, yeah, in the calamities, yeah, or natural disasters, yeah, earthquake, yeah, flooding, yeah. So for this, however, you should do what you can do to reduce the impact they will have if they do occur, and you should have a plan in place just in case they can do, yeah. So it means that you have to focus on reduction or mitigation approach. And the last one is the high impact and high probability. So the risk towards the top right corner are the critical importance. So these are your top priorities and a risk you must pay close attention to. So based on this 4-1, yeah, you have to conduct your own strategies then. Yeah, so you have to be able to locate your risk. And when you have located that risk, then you have to conduct some strategies. Yeah, the next one, please. So this one is dealing with the risk. Yeah. So there are 4 possible strategies for dealing with the risk that may have negative impact on the projects. Yeah. So negative impact to the project. The first is avoid. Yeah, you may avoid. The second one, you transfer, look like insurance. Yeah, insurance, you are transferring the risk. And the third one is mitigating the risk. And the fourth level is accepting the risk. So if you accept the risk, then you feel that the risk can be managed by you. Yeah, or the risk still under your threshold, within your threshold. Yeah. And the last one, dealing with opportunities. This one is the positive one. Yeah. Strategies for the positive risk or opportunities. So the risk will create opportunity. Yeah. For example, in the case of COVID-19 last time, yeah, there is possibility to create new sector of job. For example, mask. Yeah. Fast face mask. Yeah. And also the hand sanitizer, for example. So this one creating opportunities. Yeah. So what is strategy then? Exploit. You can exploit that. Share, enhance, and accept. Yeah. So these four strategies actually represent the degrees where you should do based on your certain level of risk that you have. Yeah. Next one, please. Hey, Rizky. Almost finished this first slide. Next, Rizky. Next slide. Yeah. So the last one is monitoring and review of risk. Yeah. So monitoring and review should be a planned part of the risk management process and involve regular checking and surveillance. So what Dr. Anwar just now mentioning you about the liquidity risk, credit risk, yeah, also operational risk, market risk, those risks actually are almost be happening in the context of banking operation, because the bank are operating over time and they will be creating excess, yeah. And the bankers or the policymakers should monitor that risk, yeah, regular checking, yeah. So these results should be recorded and reported externally and internally, yeah. Therefore, the policymakers somehow they are creating standard, yeah, regulatory standard, because they want to ensure that all the reported and recorded risks are complied with the regulation, yeah. And the last one is all risk management processes, yeah, follow the same basic steps. So the basic step is you have to start with identification, assessment, yeah, and then analysis. And also the last one is evaluation, and last one is monitoring. So if you do this 4-step or 5-step sequentially, then it will be giving you the very effective risk management process. Yeah. Okay, that's one my first slide. Yeah, I take 10 minutes. So in the next 20 minutes, I will go to the next part. Yeah, about the how the risk development or Islamic banking development in the case of Indonesia. Yeah. Okay, with Rizky, could you please just left the screen, then please share on my second screen.
Oh, yeah.
Okay, so in case that you have any question in mind, dear participant, don't hesitate to just write down in the chat box, yeah, in the chat Zoom, either to Dr. Anwar or myself, yeah. So we are happy to to give you some feedback then, yeah. So my second presentation here, okay, my second presentation, I just remembering what Dr. Anwar mentioned about how the risk or the Islamic banking development in the case of Indonesia and how it relates with the risk management concept. Yeah. So this one, next one, Brother Rizky. Make it fast, Rizky. Yeah. So just overview of Islamic banking in Indonesia. Next slide, Rizky. Yeah. So in the case of Indonesian banking development, yeah, we have started our Islamic banking and finance actually after 1990s. Yeah, I think we are quite lag behind compared to Malaysia. Yeah, Malaysia started the Islamic banking development in 1980s. Yeah, but Indonesia in 1990s. So this one actually after Suharto, after Suharto came to power, yeah, and the late of 1980s, President Suharto's position on Islam shifted significantly, and he began to accommodate the Islamization movement, yeah. And next one, Anggi. Next slide. So after regime shift, yeah, so we have President Suharto regime since 1965 yeah, until 1998. Indonesia experienced an Islamic renewal, yeah, characterized by increased influence in Islam, yeah, and we have so many establishment of the Islamic schools, yeah, infrastructure of development, yeah, focusing on construction of mosques, Islamic school, yeah. And also in 1990s, also we have the establishment of ISMI, Indonesian Association of Muslim Intellectuals, in December, whereby the first chairman is our former president, yeah, B.J. Habibie. Next one, Rizky. Next slide. Yeah, next slide, please. Yeah. So through the 1990s, the new order progressively granted more support, yeah. And therefore, next slide, next slide, Anggi. Next slide. Next slide, Anggi. Yeah. So the next one in 1990, then we have the first establishment of Islamic Bank called Bank Muamalat Indonesia. Yeah. So this one actually is the output of the discussion almost 2 years, yeah, with our former presidents, yeah, of Suharto, and then with the blessing of at the moment, the first Islamic banks, yeah, was incorporated. Next one, Anggi. Yeah. Unfortunately, the market share analysis in terms of Indonesia right now still below 10%, yeah, in terms of the asset development. So compared to Malaysia, I guess they have already had more than 20% right now. But Indonesia, more than almost 30 years, yeah, since 1990 until now, we are now struggling to have 2 digits percentage, yeah, of total banking market share in Indonesia. There are 2 factors actually. The first is the asset accumulation in Indonesia are still low, yeah, or because the approach they conducted by government may be bottom-up approach, yeah, not top-down approach, so that the speed of the asset accumulation is very slow. Or the second one is the asset accumulation in conventional bank much more exponentially growing compared to the Islamic bank development, yeah. So therefore, we need more militant, yeah. We have more effort maybe to catch up with the conventional one. And also in terms of the key players in Indonesia, it's not that many compared to the conventional one. Currently, we have only around 13, yeah, 13 full-fledged Islamic bank in Indonesia, compared to the conventional banks, yeah, compared to the Islamic rural banks, yeah. So quite few, yeah, compared to the other banks. Next one, Anggi. Rizky, next slide. The next slide, please. Yeah. So this one is another data figures, yeah, about the asset of the BSI. Here is the Bank Syariah Indonesia, the biggest Islamic banks in Indonesia right now, whereby this BSI is the merger of the 3 government banks, yeah, in 2021, yeah. So Bank Nasional Indonesia, yeah, Bank Rakyat Indonesia, and also Bank Mandiri Syariah. So they merge in 2021 and become Bank Syariah Indonesia. And you can see now here in terms of industry, yeah, the asset growth here less than 20%, yeah, in the few months. And also in terms of the NPI, yeah, NPF also going down, yeah, almost 2%. And also in terms of LDR here is more than 80%, but less than 100%. Next one. So in terms of the asset quality and margin, yeah, we can see that the NEM, net margin, yeah, is net income margin here, yeah, is quite good, yeah, 2%, yeah. It does mean that the profitability in the Islamic banks is still good, yeah. But this one, in terms of sustainability, also is good, yeah, 20%. And the stronger car also become the one that buffer, yeah, that quality, yeah. The car is more than 26% compared to the regulatory car that assign, yeah, is 8%. So we have 26%. So above the regulatory car that assigned by the regulators. The next one, Anggi. just quick. So here is the banking industry market share that I said to you before. Yeah. So if we compare here, we have the asset, yeah, we have third-party fund, and so we have the financing. Yeah. So Shariah Bank, yeah, versus the national bank here. Yeah. So in terms of the asset, yeah, asset here, yeah. So the asset still 7%, yeah, in November 2024, yeah. And in terms of the third-party fund here, 7%, yeah. So if the financing here only 8% compared to the national bank, yeah. So it does mean that less than 10%, very low, yeah. And here is the BSI, BSI versus National Bank. Yeah, BSI here the biggest Islamic bank in Indonesia. The share still overall still below 5%. And the BSI compared to the Islamic banks, yeah, you see that almost half of the share in terms of the asset, in terms of the financing, in terms of third-party fund, so almost 0.5%. Yeah, it means that the Bank Syariah Indonesia, yeah, keep being the biggest Islamic bank in Indonesia right now. Next one, please. Next one. Next slide. Yeah, so this one's another current market status, yeah, Islamic banks, yeah, the national bank, yeah, asset loan, yeah, they are still under control, yeah, but for sure this continuing growth actually just contributed by the BSI itself, not by other Islamic banks. So it does mean that the fairness or distribution of the asset, of the financing, and the asset quality, and profitability is not that equal. Yeah, there are Islamic banks that's so active. Maybe some of Islamic banks are not active or not progressive. Yeah. Next one, please. So this one in terms of the customer behavior. Yeah, I think Dr. Anwar just now mentioned about the how the risk actually is represented actually through the behavior actually from the customers. Yeah, if you see from the papers published, there are so many research that concern about the customer banking behavior. What make them behave? Yeah, what make them motivated to invest or to put the money in the Islamic banks? So based on the some references by the references, we can separate it into 4 categories of depositors. Yeah, the first is rationalists. Yeah, rationalists. Only 20%. Yeah, the rationalists here in 2014. But right now in the 2044 become 30%. It does mean that the literacy, yeah, the inclusiveness, yeah, in Indonesia, Islamic banks become better. So there are more people that more understood about Islamic banks. And the universalist here is the functional and benefit preference. So it means that to what extent the customer that they're still comparing between conventional and Islamic bank, whereby is the more benefited is other. Yeah. So this one is increasing 30%. Yeah, universalist. So they are more logis, yeah, or more equal looking at both banks, not too Islamic or too conventional. They are neutral. Yeah. And apatis here lower, yeah, 30% to 10%. It means that more people in Indonesia are well educated right now in terms of the banks, yeah, particularly Islamic bank. They are more well versed, yeah, in terms of the Islamic bank activities. And conformist here is the Sharia. It means that loyalists, yeah, the one that very loyal, even though the conventional bank are increasing interest rate, they are keep putting the money in the Islamic banks, yeah. But the number not significantly increased, yeah, only 20 to 29%. But overall, this picture gives you to what extent the emotional value and spiritual value they are interacting each other that connected with the human behavior. Yeah. So you can see here the horizontal line spiritual value, and in the vertical interval vertical axis here is the emotional value. So those two things are interacting each other and then creating the spirit of whether the Islamic or conventional. Yeah. So next one, brother Rizky. Okay, this one is some maybe some suggested one, yeah. So government's policy and support, yeah. I think the Indonesian government has full support. Right now we have KNIKS, yeah. We have Committee National Economy Syariah, the committee under president, yeah, that focus on Islamic banking development and role of central bank. Also, we have dual system, yeah. So we have Islamic bank, we have central bank that focus on conventional. We have focus on Islamic bank, yeah. So in under one central bank, yeah. Next one, Rizky. Next slide. Next one. Yeah. So this one is the, I think the rule of the Islamic bank is SMEs, yeah, financial inclusion. So my point here is Islamic bank should not follow the conventional one. Yeah, we have to be more unique. Yeah, we have to focus on that mentioned by Dr. Anwar just now. We have so many contracts. Yeah, we have murabaha, mudarabah. Yeah, we have profit and loss sharing. So we have to concern and strengthen that uniqueness and channel with the Islamic, with the real sectors economy, basically. Next one. Okay, this one is the impact. Yeah. So in poverty alleviation, yeah, sustainable economic development. So actually, Islamic bank much more, Islamic finance much more profitable and much more sustainable because they are based on the ethical economics, yeah, ethical values, and also based on the real value, real product, yeah, real good and services, not just money per se. Next one. So this one is the risk management and stability. So if you relate then between risk management, banking, and stability, actually they are related through the function of this one. Yeah. So Islamic bank focus on Islamic banking and finance, yeah, basically on real sectors. Yeah. And these real sectors basically will create real transaction. And this real transaction actually will create strong supply and demand in the society. Yeah. And this one will create more income and more generating income in this economy. So this one, in the long run, perhaps it will addressing the financial crisis because the money is not just circulating in the financial sectors, but also they are channeled into real sectors. So in the end, it will enhance also economic resilience. Yeah, resiliency here means economy can absorb the risk. In the same time, also economy can still facilitating economic activities. Yeah. Next one. Rizky. Okay, my time almost finished. The challenges is for sure, yeah. The first is we have to improve our market positioning strategies. Yeah, so we have to make Islamic finance become the alternative and become strategic policy for the government. Yeah, particularly by helping government in financing the project of the nation. Yeah, and the second one, customer perception and trust issues. Yeah, so it must be much more education, literation, yeah, to our look like you all millennials, yeah. So you have to start for yourself, yeah, and so you circulate with your parents, your families, how to make them maybe engage with the Islamic finance, Islamic banking. Next one, Rizky. So we have also Sharia compliant concern, yeah. So what extent we have to comply with the current regulation, yeah. So Islamic finance should not be just orienting to the profit, yeah. But so we have to comply with our Sharia law, yeah. So this is different with the conventional one, yeah. Conventional perspective, perhaps they just looking for the profit, yeah. But maybe disregard what extent the complacency with the Sharia law, yeah. But Islamic one, we must be concerned with that. And regulation here, so we have to be more proactive in adapting a new law, yeah, and also we have to concern with the new environment that we have right now. For example, in the case of innovation technology right now, yeah, we have so many fintech, yeah, we have so many technological banking sectors, yeah. So we have to deal with that as well. Next one. Okay, next one is yes, I mentioned you just now, how Islamic bank can deal with the digital transformation. Yeah, don't crash between Islamic bank and also the digital banks. So we have to integrate both actually. Yeah, and adapting to fintech innovation. How the Islamic bank right now become accommodating. Yeah, they are not just they're not confronting, yeah, the fintech, but they have to adopt and integrate into the operation. Yeah. Next one, Rizky. Next one. Yeah, this one is the trend, the future is the growing of digital banking service, yeah, and increasing demand for ethical investment, yeah. So this one also become part and parcel of how to integrate with the risk management then. Next one, Rizky. Yeah, expanding product offering, yeah, not only just the existing product, but it must be more creative product. But this product not must be comply also with the Sharia, and also can answer also the customer need, yeah, and strategic partnership and collaboration, yeah, for sure, yeah. Next one, Siski, yeah, expansion goals, yeah, the vision, yeah, enhancing financial literacy programs, yeah. Next one. Okay, thank you. I guess that's all from me. Yeah, exactly 30 minutes. Yeah. So Dr. Anwar and myself are happy to receive your advice, your suggestion, maybe your comment, feedback, questions. Yeah, so that we can also learn from you all. Thank you. Assalamualaikum warahmatullahi wabarakatuh. And hand over back to the Mr. Moderator, Brother Rizky, please.
Okay. Thank you so much to Dr. Dimas for the some material. It's very wonderful insight, yeah. So we continue to the next section is Q&A sections. So for all the participants, is there any questions? Please for Indonesian participant and also Malaysian participants.
Maybe in the chat, Rizky, there's a chat in the chat, maybe?
Nothing, sir.
Nothing.
Okay.
Okay.
Maybe, yeah.
Yeah, maybe for the sake of the promoting the discussion, maybe we can discuss with Dr. Anwar. So given that in Malaysia right now, Dr. Anwar, the growth of Islamic banks compared to Indonesia is much more higher. Yeah, maybe Dr. Anwar can give us some information or strategies what Malaysia had done before, so that the growth of asset or the growth of market share Islamic bank in Malaysia is, maybe I'm not mistaken, more than 20%, Dr. Anwar. And meanwhile, Indonesia right now, we are struggling, Dr. Anwar, for almost 30 years, yeah, but still below 10%. Maybe Dr. Anwar can share with us also what has been doing by the government so far.
All right. Thank you very much, Dr. Dimas. I think that I don't put this as a competition, but this is a progress. Yeah. Maybe Dr. Dimas asked about the progress. Maybe I would say that Malaysia have their own strength, Indonesia have their own strength. At the moment, we can see that the market capitalization of Islamic Bank in Malaysia is almost about 35% of growth in over the world. Because if you see the Salam report, yeah, which is being published recently, when we talk about the concept of halal industry, yeah, and Malaysia, fortunately, is the country that is being placed number one for the Islamic banking industry. All right. So later we go in deeper to look in terms of how what contributed. All right. So basically, there are various factors that leads to the this market capitalization. Is because number one, I would say is that the Salam report, basically they are giving the high emphasization in terms of the regulatory power. Okay. If we compare between Malaysia and Indonesia, the population itself, Indonesia is bigger, than Malaysia, and Indonesia is the biggest Muslim population in the world. And I see there is the potential. Yeah, I see there is a potential as well as there is a challenge in Indonesia because of the the size of the Indonesia market is very big compared to the Malaysia. So Malaysia, I would say, is that just mentioned by Dr. Prof. Dimas earlier, we are just different by 10 years in terms of the establishment of this industry of Islamic banking in Indonesia and Malaysia. And then we can see that since Malaysia, we further emphasize more on the Islamic industry. So that is the reason why we can see that in Malaysia, most of the conventional bank today, they are also offering Islamic product. So means that in Malaysia, they are 100% bank offer Islamic product. So we don't have conventional product bank live by themselves. So this conventional bank, they are now also offering Islamic product. Means that you can go to any bank, you can get to access to Islamic product. So in terms of that, that's the reason why I would say is that the banking industry is no longer looking as a religion-based industry, but is a solution for the for the banking industry, where the Islamic is giving more clear in terms of their activities, which does not involve with high gambling industry, prostitution, or non-Sharia based. So it is more inclined toward the society-based development. So number one, I would say is that the credit go to the government, because it is a top-down, where the government itself, they want the industry of Islamic finance to be the prime in the country. And number two, we can see is that the people itself now, automatically, when it's a Muslim, they will be given channel to the Islamic banking product. So the prioritization, the emphasization is being given to the Islamic bank. It's not only from the people, from the government, and also from the Central Bank of Malaysia. So it is a very so-called that complete holistic ecosystem, which able to promote Islamic banking in Malaysia to be growing fast in the 40 years of today. So that is some of my observation, Prof. Dimas.
Yeah, thank you, Dr. Anwar. So I just curious, Dr. Anwar, whether your government also pushes the companies to put the certain stock or certain money in the Islamic bank, Dr. Anwar. So we heard before about GLC, government list companies, is it? So is it any obligation for the company to put the money in the banks? Because in the case of Indonesia, we just doing it linear, Doctor. So there's no any government policy that pushes it to put the money in the bank. So that therefore the asset accumulation is much more slower compared to Islamic bank. Is it correct, Doctor? Any GLC happened in Malaysia?
I think the top down, when I say top down, basically the government itself, they play a very important role in terms of promoting Islamic banks. So they issuing sukuk, and all the money, for example, the salary of the employees, the government servant, go to the Islamic bank, Islamic product. So from that itself, it grows with the what they call it, the emphasization from the government, the motivation for the government. So I give my credit more to the government, and from there, people also follow with the trend with the government effort. How about in Indonesia? What do you see about the new initiative? Is there because now you are now with the new president, we are also with the new prime minister, but our prime minister is basically also the one who promoted Islamic Bank previously. So now he is the prime minister. So of course, his journey to promote Islamic Bank is always there. So how about in Indonesia now, Professor Dimas?
Yeah, thank you. So basically in Indonesia right now, basically we are inspired by Malaysia because some of our Indonesian actors, Islamic banking and finance actors in Indonesia right now, mostly graduated from Malaysia, and in some of the universities also, when Dr. Anwar observed, where some of the head departments, the deans, also directors, are even they are taking some study or experience in Malaysia, So, but in the case of Indonesia, we are taking our new our own goals, our approach actually, because you said before that Anwar, we are so large. We have almost 300 million population right now, and some of them are still under the poverty line. Yeah, so therefore the Islamic Bank and Finance in Indonesia are bottom up. Yeah, the approach. Yeah, whereby the government just give the moral suasion. Yeah, to the companies to involve in the Islamic Bank. And at the same time, also the government also give the very intensive education and financial literacy. Therefore, we have OJK here, yeah, OJK, yeah. We have KNIKS, yeah, Committee National in Economic Sharia. So those institutions are formed actually how to penetrate the understanding education about Islamic finance. However, this kind of effort are very slow and also the speed is not that fast, Doctor. Therefore, the strategy right now of the government is how to make Islamic finance being channeled mostly to the SMEs. Yeah, SMEs. Therefore, in the case of Indonesia right now, we are inviting more SMEs to involve, yeah, to Islamic banks, yeah, by giving them small financing amount, yeah, educating them with the many contracts that we have, yeah. So hopefully by that approach, then yeah, for sure the asset is not that growing fast, Doctor, but in terms of the root, yeah, the root is much more stronger because they are really connected with the bottom of the people that may be quite difficult to get access to the conventional banks. Yeah. And another approach here, so Doctor, here is right now our concern is how to make the Islamic banks can be really comply or maybe collaborating with the fintech industry. So in that case, that there is no any contrasting situation whereby fintech and Islamic bank, they are going in the different ways. So how that right now the Islamic bank taking some inspiration from the fintech industry, or they create their own fintech regulation or fintech activities in the banks. So this is kind of the new approach how to make Islamic bank much more inclusive, yeah, much more maybe easy to be accessed, yeah, and accommodate the current trend of the innovation or fintech development. And the last one, also Dr. Anwar, that we have been doing right now is the government of Indonesia right now is have a policy of master plan of development of social finance, Dr. Anwar. I think it's your concern. So wakaf and zakat, yeah, become part and parcel to be part of Islamic banking and finance development, whereby also including Muhammadiyah movement. We have so many wakaf land, yeah, zakat potential that not yet being professionally managed, yeah. So that I guess the Islamic bank or Islamic finance could integrate that kind of potential into their instrument, Dr. Anwar. So hopefully by this Islamic social finance and Islamic commercial finance, if they are integrated, then we'll come up with our contemporary Islamic finance. So this one is another challenging issue, Dr. Anwar. Maybe we need your advice how to make this integration become smooth, and in the end they can give the benefit to the society at large.
Yeah, I think I do
Yeah.
agree with all your discussion. We are just 10% of Indonesia. We are just 30 million. Indonesia is 300 million. Then if to be measured the success of this financial institution by looking at the market capitalization, I will not be strongly agree, because at the end of the day, we wanted to see the changes in the people. We wanted to see the changes in the society, how the society is basically can be upgraded from their lifestyle. And we want to see more the asset to be circulated to the people instead of concentrated to the certain people, individual. So that's why I love your point on the third part, how the zakat wakaf, it will be the instrument that basically is going to circulate the asset to more people, and upgrade what they call it, the gap between the rich and the poor. And today we see is that maybe the rich may not be what they call it concerned in terms of that, because they wanted to make sure they maintain their richness and they become richer. But in the society, in the economy, basically the responsibility of the leader is about how they can basically translate the wealth of the nation can be also tasted by every individual of the society, regardless to their background, regardless to their so-called that what they call it income. So that will be matters. All right. So the industry, of course, the industry health is very important. And now is what will be the responsibility of this industry to what they call it, to eliminate the social issue that which is being given highest priority by the people. So the people wanted to see the industry is good and how the industry able to benefit the society. So at the end of the day, as a Muslim, as a Muslim, we wanted to make sure that the spirit of zakat wakaf is that is circulation of wealth, circulation of every people in the society need to be supported, and they should not be people in the hunger. They should not be people living in poor. They want at least the people able to meet their daruriyah, hajjah, and last but not least to reach to their taksiniya. So that is basically the ultimate aim in the society.
Okay, Doctor. Maybe from dear audience here, you would like to confirm some issues. Perhaps maybe you want to share maybe your idea. Most welcome. From my student, and maybe or maybe in one student from many universities also. For my course also, please. We have also Dr. Anwar here. Please.
Hello, sir.
Okay, please, Dennis. Please introduce yourself first. You are from and what is your question?
Hello. Okay.
Yes.
Assalamualaikum, everyone. My name is Muhammad Dennis Haikal bin Sharon, and I'm from University Malaysia Terengganu, UMT.
Hi, Dennis. Assalamualaikum.
So I have a question for Dr. Anwar.
Yeah, Dennis.
What is the basic systematic risk management? And as a student, what is the key component that must be understand about the risk management?
All right.
That is my question, sir.
Thank you very much, Dennis. You are asking about the systematic risk management, yeah? So
Yeah.
when I say earlier about the systematic risk management, systematic means that the risk which you cannot eliminate, but the risk which you can control. So this is the basic understanding about systematic risk, all right? So systematic risk is usually will be a risk which is being, what they call it, effect from the external forces. For example, yeah, for example, now Dennis, you are as a student in UMT, all right? There are things that within your control. There are things is outside your control. For example, all right, you are in the hostel, but you need to come back at 9 o'clock to your hostel. But the university says that the last time every student should be inside the hostel should be at 10. Okay, so you cannot change the time at 10. All right, but you can change yourself to be earlier before time. Okay, the one that you cannot change is a systematic risk. The one that you can change is known as unsystematic risk. All right, that is one of the examples that you can differentiate between a thing from the systematic risk and unsystematic risk. All right, in the context of financial institution, yeah, financial institution is basically they are exposed to risk. All right, every individual on this earth, we are exposed to the risk, all right? So in the finance institution, they invest, all right? They take people, they go and invest their money. For example, in Malaysia, we do have GLC, we do have Petronas, we have Permodaran Nasional Berhad, we have Tabung Haji, all right? So all these financial institution, basically, they get money from the investor, and this financial institution, basically, they are the intermediary, all right? Intermediary means that they are the middle between us and the investment engine. So for example, Tabung Haji now, they will take the depositor money and they will invest, all right? They will invest into various instrument, all right? Various instrument, and they will be exposed to the risk. The risk means that either they get the return or they get the loss. All right. Loss will be unfortunate, but return is depends. Sometimes you get higher return or lower return. So basically the things that make it higher, lower, or loss, that is the degree of the risk. All right. That is the risiko which is being exposed to this financial institution. All right. Anything that related to the risk inside the tabung haji. For example, tabung haji, there are some issue in terms of their internal, maybe their staff problem. They can terminate the staff and they can take their new staff. That one known as unsystematic risk, all right, which they can handle by themselves. But anything that outside the tabung haji, which they invested to the respective market, suddenly the market is crash, all right, but they cannot eliminate that crash, but they can control, for example, that they need to offset, withdraw from that respective investment, which basically they are lost because they did not invest in the right way. They initially they make a decision to invest that, but they cannot control the impact from the outside effect to that investment instrument. So that one is known as systematic risk. All right, Dennis, do you have any further clarification from my explanation? Dennis, are you there?
Yeah, I understand, sir. Thank you for the answer.
All right, welcome, Dennis.
Thank you also, Sir Dimas.
How about others? Anyone?
Yes, I have a question.
All right.
Yes,
Aiman.
please, Brother Aiman.
My name is Muhammad Aiman bin Muhammad Fairuz. I'm from University of Malaysia Terengganu.
All right.
So my question is, how might a company in Islamic finance prioritize risk differently than a conventional bank using this framework?
Okay. You are asking to me or Pak Dimas?
Pak Dimas.
All right, Pak Dimas.
Yeah, I think Dr. Anwar also eligible to answer that. Okay, you first, Dr. Anwar, and then I will follow up then.
All right. Just now, Aiman, you was asking about how does the conventional financial institution and Islamic financial institution measure the risk. Aiman?
Yes.
All right. So generally, number one, both of these financial institutions, basically, they are sharing the same risk. All right. Same risk. Just now, during my presentation earlier, I was talking about the credit risk, liquidity risk, rate of return risk, market risk. So conventional bank and Islamic bank, both of them are sharing this risk. All right. However, in the context of Islamic bank, they have one operational risk which they are also exposed. Number one, it will be Sharia compliant risk. Sharia compliant risk is basically related to the organization activities. Make sure that they comply with Sharia activities requirement. For example, all these Islamic financial institutions, they must ensure that every activities that they involve must be complied with the Sharia compliant. For example, if the organization they invest to one institution, for example, if we are from Malaysia, we can go to Bursa Malaysia and we can check some of the company is belong to non-Muslim is also Sharia compliant. All right, there will be S in their name. For example, 7-Eleven, there will be S. 7-Eleven will be S, maksudnya Sharia compliant. What happened to 7-Eleven? Since that you are in Malaysia, I'll give you an example of 7-Eleven. 7-Eleven is selling all groceries, include with the alcoholical beverages. All right. So if the bank, they see, okay, 7-Eleven giving a profitable income, I think we can invest to the 7-Eleven. All right. And at the same time, we know that 7-Eleven is also selling alcoholical beverages, but we can calculate the, what they call it, according to the Security Commission, we can calculate the, do the Sharia screening. If the return of the beverages, alcoholic beverages is more than 5% from the total income of 7-Eleven, means that they have violated the Sharia compliant. All right. So in this situation, if the bank invested in Sharia compliant instruments such as 7-Eleven, and 7-Eleven suddenly found to be what they call it abuse, or they have basically not meet with the Sharia compliant, and Sharia compliant status has been revoked. Therefore, this bank need to take action, which they need to withdraw for their investment from the respective 7-Eleven. All right. Sometimes there is also some of the issues that people says that the return which is gained from some instrument which is not Sharia need to be purified. All right. So basically the Sharia compliant organization such as Islamic Bank, they have a very serious what they call it task for them to make decision. The decision is about how they can make sure that their investment from the beginning until the end, which is the return, should be what they call it without any non-Sharia compliant issue. So must be halal. So conventional bank, basically, they don't care about that. They are only caring about how much return that they can make. But for the Islamic Sharia compliant organization, they must make sure they make money, and the money that they make must be halal. They must be Sharia compliant. All right. So that is my comment, Aiman. Maybe Dr. Dimas, you can add from your opinion.
Yeah, just short, Dr. Anwar, you have already mentioning very details. So regarding with the risk management for corporate or for certain institution, I think we have to understand first, Brother Aiman, is where our risk actually located. Yeah, so your risk in which matrix, yeah, whether your risk is low or high, yeah, or maybe medium, like that. So when we have understood your condition or your location, then you have to measure, yeah, to what extent the risk tolerance that you are going to accept, yeah. So whether you want to you still have a probability to improve your risk or decrease your risk condition from now. So if you have had your own risk tolerance or your risk threshold, then you compare with your existing risk and you try to monitor that one. So we can call it as a risk surveillance, yeah. So if you come up with the risk surveillance, then you can be able to sustain your risk development. Or in other words, you can always be resilient because you can manage your risk, and at the same time also you can still do your activities. And the last one, for sure, when you have already maintained that existing risk with a certain threshold, and you have already had your surveillance mechanism or monitoring activity, then you can come up with the forecasting risk. Yeah, you can forecast your risk in the future. So based on your historical risk. So by that, then you can sustain your risk in the long term, not only just existing situation. Maybe this my humble adding information from Dr. Anwar. Dr. Anwar, by the way, we have been in the 1 p.m. So
Yeah.
are you going to maybe to extend a bit, or we just finish our session?
Yeah, I think we can finish the session.
Okay, so maybe before we end the session, is there any other question perhaps? Because we do worry that some of participants here still have some question in mind, and
Yeah.
they will not sleep because the question is not question to us. Yeah, is there any question from you, dear
Sir,
participant?
I have one more question, sir.
Yes,
So, how Dr. Anwar, will you
Tapi
accept
dalam Indo bisa nggak, sir?
Oke, silakan. In bahasa Melayu boleh, ya.
Ya. Tadi kan Pak Dimas ada mention pasal threshold yang digunakan di dalam banking, terutamanya Islamic banking kan. Jadi bisa nggak threshold itu digunakan di luar selain daripada banking, misalnya bisnes atau lain?
Oke, terima kasih ya, Dennis.
Iya.
So, if you are taking my course in Islamic banking practice in the 6th semester, yeah, I discussed with the student how to calculate the threshold of risk. Yeah. So I developed a certain step, yeah, 15 to 30 steps, yeah, how to calculate the threshold, the tolerated risk, yeah. And for the risk tolerant risk that I mentioned to you, it really is based on the situation, but Dennis, you cannot just use it or fit for all. No. So you have to calculate by identifying certain indicators. So you have to select the leading indicators, yeah, or leading variables, and from these leading variables or indicators, you come up with the indexation. Yeah, this indexation then you will generate it with certain steps, yeah, so many steps, yeah, and in the end you will come up with a certain threshold for respective variables or respective indicators. So by that, then you can see, for example, in the case of NPF, to what extent the optimal NPF for the bank based on the historical data. So from this percentage until this percentage, and for LDR, for the ROA, and for others. So depend on your leading indicators. So by that, then you can compare with the existing data. Yeah, whether this data passing the upper or lower threshold. So if passing the upper and lower threshold, then you have to conduct a policy, how to downgrade or upgrade that situation so that the level of risk development, yeah, still within the tolerated threshold that we developed before. So I think the technical thing you can learn from. I have a module actually, but there is if you want it, then we can share to you after the class. Yeah, because it quite detailed and technical. Yeah, yeah. Okay.
Okay, sir. Thank you, sir.
Thank you for Brother Dennis. And before I pass to Mr. Moderator, on the behalf of Universitas Muhammadiyah Jakarta, I would like again to thank to my fellow friend, Dr. Anwar, for the willingness to accept our humble invitation. So hopefully it's not the last, Doctor. Yeah, maybe there will be the next collaboration, yeah, in terms of the research publication and also the many things between UMY and USM. And the second one, for sure, on the behalf of International Program of Islamic Finance, UMY, we'd like also thank you to all participants, yeah, from student of elementary school, from the senior high schools, student from various universities, yeah, in Malaysia, in Indonesia, yeah, and also all the students that coming from different departments, yeah, not only just from economics, so from Islamic Finance Islamic Finance Department, we have also the student here. And not forgotten also, Dr. Anwar, thank you also for inviting your student also here to discuss with us so that we can have a joint discussion, joint meeting, or joint teaching together for today's discussion. And hopefully you are willing also to conduct for another team teaching in the next future, Dr. Anwar. Yeah.
Thank you very much.
Okay, that's all. Maybe Dr. Anwar, would you like to say something, please?
Yeah, thank you very much, Dimas. Appreciate the opportunity. I think it's not only for us. I think for everyone here, they have an opportunity to listen from your side, also my side, and also a new good model, I would say, is that I would like to continue this in the future, where we can have more students to benefit from the sharing, and also looking forward, inshallah, to be in the next class. And thank you, everyone. Thank you, Chair, and also all the students. Thank you very much. And hopefully that we have a fruitful session in this morning. Okay, Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Please, Brother Rizky, we hand over back to you.
Okay, thank you so
Maybe
much.
we can have a photo picture together, Brother Rizky, before we end the session with all participants. Yeah.
Okay, before we close, maybe we can, to all the participants, maybe you can open your camera. So we have photo sessions. Okay, wait. Okay. Nice. Okay. Okay.
Yeah. Okay.
Okay.
Others are waited. Yeah, we could have a photo picture together.
Oh, Zaid.
Okay.
Mei Wei.
Okay, one. Okay.
Oke, mungkin ditunggu dulu Rizky. Mungkin ada
Oh,
yang
iya.
masih mengkondisikan diri.
Okay, okay.
Oke, ditunggu 1 menit, 2 menit.
Okay.
Nak prepare nak pergi semayang dah.
Ya.
Okay, where are the rest? Natasha, Radia, Syamil, Farhan, Radia.
Okay.
Yeah.
Wait.
Okay, one.
Oke, please. Rizky.
Okay. In 3, 2, 1. Okay, next. Another one. 3, 2, 1. All right. Okay, thank you so much, Dr. Dimas and also Dr. Anwar.
Bye-bye, selamat ya, everyone.
Okay,
Thank
let's
you, Dr. Anwar. See
Thank you.
Stay
Selamat
safe
Hari
and
Raya.
health.
Take care.
Let's send our warm regards to your deans.
Allah, same here.
Ya, insyaAllah.
Pak Rizal ya.
Oke, Dokter. InsyaAllah.
Okay,
Oke, thank you everyone. See you again.
Thank you, friends.
Ya, Assalamualaikum.
Salam.
Thank you, sir, and Mas
Okay, Doctor.
Rizky.
Alright, thank you.